Good afternoon. Welcome to the Little Blue Organic Farm webinar. My name is Rob Moore. I'm the general manager here at AcreTrader. I'm joined by our managing director of investments, Drew Lipke. We're going to be going through the latest offering that we have launching on the platform. This launches tomorrow, 1 Central Time. Start by discussing farmland as an asset class, and then Drew will dive into specifics of Little Blue Organic Farm. Before we start, we have a few slides with pertinent information for your review. We'll show each of these with enough time to review. Also, please note there is a PPM in the document section of the offering page that contains a full list of associated risks, as well as all the information about the associated offering. This is an investment, and all investments involve risk, some of which are outlined on this slide and the next. Among others, we point to illiquidity risk, as well as commodity, weather, and geopolitical risks that may impact farmland markets. And again, on top of making sure to review the PPM, we offer a full financial model that can be found in Excel in a downloadable fashion on the offering page. We have a very detailed breakdown of this and all investments on our platform. And as always, please never hesitate to reach out to us directly with questions. We're available both via email as well as via phone. All of our information is directly on the website. Moreover, as we move through this webinar, please do not hesitate to submit questions. You can submit those via the questions box at the bottom of your screen. Drew and I will get through as many as we can at the end of this webinar, and then we'll directly follow up with any individuals who ask questions that we do not have time to answer today. So obviously at AcreTrader, we're in the business of offering opportunities to invest in entities that give you access to farmland as an asset class. There's multiple factors as it relates to farmland as an asset class that are important to consider, and we'll discuss those in the next several slides. First, the appreciation of farmland values over time has been a result of the shrinking supply and increased demand. Second, there's relatively low volatility within farmland, and the downside protection can be provided due to a historically low correlation to economic and political events, as well as a low vacancy risk of investment-grade farmland. Everything we discuss in this webinar, we have quite a bit on our Learning Center as well. So if you ever want to look into the actual data sets used to back up some of this information that we'll provide, we're more than happy to discuss that directly. And our Learning Center has quite a bit of resource available on that front. Third, we'll talk about the diversification that farmland can provide and the ability to reduce risk with a less correlated asset class. And then finally, farmland is an underinvested asset class. When you combine better data and unique sourcing, this can present opportunities to investors. So there are now 382 million cropland acres in the United States. We have lost almost 63 million acres since 1997, this according to USDA census data. So over the last 25 years, we have lost almost 5 acres of farmland every minute. This is a critical point when looking at farmland as an asset class, because almost no amount of money can increase the supply of quality cropland in the United States. In other real estate asset classes, you see heavy fluctuations in supply. So you can build more homes, you can build more buildings. In farmland, once a farm is taken out of production and turned into, say, a multifamily development, that can't be easily put back into farmland. And while the supply of cropland is shrinking in the US, the global demand for food is expected to increase. So the global population is expected to add another billion people over the next 2 decades. And as income rises, so does food consumption per capita and the type of food consumption. This historically has put increased pressure on crop production. So as an example, HSBC estimates that total global food consumption will rise by 50 to 70% by 2050. Again, with the shrinking supply of arable farmland, we have a fairly straightforward relationship between shrinking supply and increasing demand for the products we produce on that ground. The UN forecasts that global food demand will increase by 40% from 2012 through 2050. This is a combination of global population growth and then again higher per capita calorie consumption. This especially shows up in the meat industry. So as populations increase in income, they typically increase the meat consumption within their diet. Well, that meat consumption relies on crops that are grown for the food supply. And again, that makes up a fairly meaningful portion of the crop ground across the United States. Now, you can't talk about returns without talking about risk. So, this is one way to frame that. As you can see on this graph, farmland average total returns have compared favorably to other asset classes. This is looking at stocks, CREs, and REITs, and they have done so with less volatility. So, the NECRI Farmland Index has provided a 10.3 average annual total return with about a 7% volatility. The only index to demonstrate lower volatility is CDs. Meanwhile, the value of cropland in the United States, at least historically according to the USDA, has increased over time. So you'll note that this is the underlying land value or asset value and excludes any income for the land. As I'm sure Drew will go over later in this presentation, there's two sources of return within farmland investing. One of them, the primary driver, is the appreciation of the value of farmland. Second is the annual cash flow from the farming operations on that ground. So this graph right here is not the total return of farmland. This is just asset value. The first point is that historically, farmland has proven to be a store of value in times of both economic and geopolitical uncertainty. So over the last 27 years, through geopolitical events such as 9/11, the Arab Spring, the Russian invasion of Ukraine, and economic events, so the dot-com bubble, the great financial crisis, the COVID-19 pandemic, farmland values have historically remained resilient. So because of the combination of the shrinking supply, the scarcity of farmland, and then increased demand, we've seen a cropland value increase of approximately 5.8% annually. And again, that's an average. So the impact of inflation is also a key consideration for any long-term investment. These investment horizons are often longer than 5 years, and as mentioned in the risk factors, they are largely illiquid. So this chart shows the annual year-over-year change in CPI compared to the USDA's data for land values for the 32 top producing agricultural United States. Note this is just the change in farmland values, and again, excludes any land income that comes in, which is traditionally going to be a part of an investment on AcreTrader. The key takeaway here is that farmland values have shown a 0.67 correlation to inflation. This is dating all the way back to 1911, or as far back as we have data available. You'll also note that the green line that represents the change in farmland values tends to move at a greater degree. So historically, farmland has increased at a greater degree than inflation. Here we're using a different data set. This is the USDA data to show representative aggregate returns by region. So each year, the USDA provides county, state, and region level farmland values. This is based on their annual survey work. In addition, they provide county, regional, and state cash rent per acre. So here we're showing the year-over-year change in farmland value to represent appreciation, and the cap rate based on cash rent to represent total return by region. This includes all cropland acres, so it encompasses marginal farmland all the way to Class A farm ground. So what you're seeing here is that the return profile is similar to the data that we see in the NECREIF index, with total average annual returns ranging from 7% to 12.3%, with a volatility range of 2.8 to 8.8. Again, this data set goes back to 1997, so is representative of the last 27 years. In total, the index has shown average annual appreciation of 5.8% for U.S. cropland, with an average annual cap rate of 3.7. So think about it as a total return profile of 9.5 with a 5.3 historical volatility. Note that the state of Nebraska is located in the northern plains region of the USDA. Nebraska is where the Little Blue Organic Farm is located. Now, as a potential investor on our platform, it's really important that we provide an easy and transparent space to access these investment opportunities. So if you log into your account right now, you will see two available offerings. One of them is the Orange Park Vegetable Farm. That one has a closing soon emblem, has about 10% remaining within that cap table. And then the Little Blue Organic Farm, which will open for subscription tomorrow at 1 p.m. Central Time. There are only two things necessary after you've set up your email login to be able to access these investments. And as you'll see, if you click on your picture or first initial in the top right-hand corner and go to your accounts page, you will very clearly have bars at the top of that screen outlining if there's any steps necessary. There is a brief questionnaire that must be filled out, and then there is proof of accreditation that must be submitted. As we mentioned several times and will continue to highlight, we pride ourselves on being an accessible business. If you need anything at all from us, or you have any trouble accessing either our investment opportunities, navigating your account, finding access to documents, please never hesitate to email or pick up the phone and call. We, again, pride ourselves on being available to our investors, and both myself and Drew would be more than happy to speak to you directly to help you through that process. So now that I've covered the asset class and a little bit more about the offering page and platform, I'm gonna hand it over to Drew to go over through the specifics of the Little Blue Organic Farm.
Yeah, thanks, Rob. So talking about Little Blue Organic Farm, located here in South Central Nebraska, we're going to run through several of the investment highlights. So this property consists of approximately 484 acres in a region that is well proven for the production of organic corn and organic soybeans. As we're going to discuss, the U.S. is a net importer of organic corn and organic soybeans. And that's a key consideration when you think about this investment and, think about the um, global trade issues that we're seeing right now. Also, we're going to talk about how the property is being purchased at a very attractive price relative to recent comparable transactions. And then finally, how the property is leased at an attractive rate through 2027 with one of the top organic growers in the state of Nebraska. So just looking at the overview here, of the 484 acres, approximately 96% of the acres are tillable. This is going to mark our second organic farm in Adams County and our third organic farm in the state of Nebraska. The total purchase price here is $8,505 per tillable acre. We'll walk through this in detail, but this represents a 20% discount to comparable transactions within Adams County over the last 16 months. And again, this farm is leased through 2027 at $415 per tillable acre. So $415 per the 463 tillable acres here. Just looking at the infrastructure overview. So of the 484 acres, again, 463 are tillable, 410 are under pivot irrigation, all with relatively new pivot irrigation systems. Each pivot has swing arms that allow for irrigation within the corners of the fields. And there are 3 wells on the property. And water is a very important consideration with this investment, which we're going to talk about here, looking at groundwater in Nebraska. So this farm sits in the Little Blue Natural Resource District, or NRD. This was formed in 1972. The state of Nebraska has done an exceptional job of managing their groundwater resources, creating local NRDs that have the authority to regulate groundwater. And this proactive management has resulted in moratoriums on new wells, the installation of flow meters, and these 2 things have implemented the overdrafting of the groundwater aquifer, which is a problem that we've seen in many unregulated markets that are west of the 100th meridian. The fact that groundwater here has been proactively managed and regulated for over 50 years, and the strength of the NRD here is really a key factor in our due diligence for any farm that we look at in the state of Nebraska. What we're showing here in this chart is that farmland under pivot irrigation is much more water efficient when compared to furrow or gravity irrigation methods. If you look at it, the neighboring tri-basin NRD is where this chart is derived from. They require 8.25 acre inches on average annually for optimal irrigation of corn. That's about 42% more efficient than furrow irrigation. So again, we have very efficient irrigation infrastructure on this property. And then looking at the Little Blue Natural Resource District, or NRD. So again, local NRDs in Nebraska, they have 3 primary methods to ensure that groundwater resources are appropriately and sustainably managed. You can provide moratoriums on new irrigated acreage, implementation of flow meters for monitoring, and then annual groundwater allocations as needed. The Little Blue NRD has implemented all 3 measures to appropriately manage their groundwater here in the recent years and recent decades. This also speaks, when you think about the moratorium on new irrigated acreage, it also highlights what Rob mentioned earlier, which is that scarcity and supply constraint, and speaks to the limits of irrigated acreage in Nebraska. So the Little Blue NRD has required flow meters since 2017. They've had moratoriums in place since 2006 in much of the district. In addition, last year they implemented a 5-year allocation that allows for 65 acre inches of water over a 5-year period, meaning that a farm can only use 65 acre inches over those 5 years. And to put that in proper context, what we show here in the chart on the right is, again, corn requires just over 8 acre inches of water annually for optimal irrigation. That is well below the 13 acre inches on average over this moratorium period. In addition, looking specifically at the Little Blue Organic Farm, in the 2025 growing season, this farm used 4 and 6 acre inches of water on the southern and northern tracts, meaning that these farms have approximately 60 acre inches of water that they can use as carryover for the next 4 years. Corn is also, there's a corn and soybean rotation on this farm. Corn is also more water intensive than soybeans. So the abundance of water is even more prevalent when you look at organic soybeans here. So next, we're going to talk about the organic market for organic corn and organic soybeans domestically in Nebraska. So organic farming practices have been shown to improve soil structure and improve soil organic matter. The practices that are used here, such as cover crops and using organic fertilizers, allows for improved water infiltration and aeration. It helps prevent compaction, and better water infiltration and retention is obviously important for irrigation efficiency. So the organic soybeans that are grown in rotation with the organic corn also provide nitrogen fixation, and it helps naturally replenish the soil with nitrogen in addition to breaking pest and disease cycles. Then when you look at central Nebraska, this region's well suited for organic production of corn and organic soybeans because of their very distinct seasons. They have a very humid summer and very cold winters. That's optimal for plant growth during the growing season. And then the freezing temperatures help control pests and diseases in the winter. So when you combine that with sustainable irrigation, that really creates this optimal environment for these crops. The organic crops grown on the Little Blue farm are sold and marketed to dairies in the Pacific Northwest, and then also to organic poultry farms in the Midwest. When just looking at organic grain markets, one important consideration to note, and this was referenced earlier, is that the United States is a net importer of both organic corn and organic soybeans. This is simply due to the fact that domestic demand for organic grain to feed organic dairy production and organic protein production outstrips the domestic production of both organic corn and organic soybeans. And this dynamic really insulates these grains from changes in global trade flows. And because of the strong demand for organic feed grains, coupled with that limited supply, that has led to organic corn and organic soybeans consistently trading at a premium to conventional crops. So historically, corn has traded at a 72% premium to conventional crops, while soybeans have traded at 120% premium. This dynamic really holds because of the fact that it is very difficult and very costly to transition from conventional to organic production. Worth noting, these two tracts have been organic certified since 2011 and 2021. So quickly going through the financials here, we always want to provide a framework for understanding potential farmland returns, and these need to be considered against the risks that are discussed in this webinar and in the PPM for any offering. Again, we point everybody to the document section of the offering page where you can download both financial model and the full PPM. But again, Rob mentioned this earlier, farmland returns are driven by 3 key factors: the appreciation of the farm during the hold period, the annual cash-on-cash distribution back to investors, which is defined here as net cash from operating activities as a percent of capital invested. Think of that as a yield. And then the initial farm purchase price relative to market prices. As you think about cash flows and you think about distributions for farmland, each year, investors receive a distribution based on lease income from the farm after covering operating expenses. That's that annual cash yield component. And then when the farm is eventually sold at exit, investors receive any appreciation or depreciation in the value of the farmland. So Rob mentioned earlier how the USDA cropland historically on average has increased by 5.8%. To help kind of frame risk around that, Rob talked about the volatility, which has been 5.3%. And so that means that using a normal distribution, the annual appreciation in any given year would fall within 0.5% and a little over 11%, approximately 68% of the time. The annual cash on cash distribution rate to investors, again, is based on that annual lease income, less operating expenses and property taxes. We walk through all of this in the PPM and in the financial model in the document section. But when you combine the projected annual appreciation plus the annual distribution rate, you get a rational assumption for the potential annualized return for any given farmland investment. So here, looking at the capital raise and the sources and uses of capital, again, all of this is explicitly listed in the financial model and the PPM. And you can see here that the fully loaded cost is $3.938 million. When you divide that by the 463 tillable acres, that's a little over $8,500 per tillable acre. And again, that's a little over a 20% discount to recent comparable transactions in Adams County, Nebraska over the last 16 months. And we actually show that here in the following slide on the farm price relative to market values. Again, when you think about return being generated by the annual lease income, by the market level appreciation, the other key component is your ability to source better and buy better. And then ultimately, it's our job during the hold period to find a motivated buyer who's willing to pay above market. And when you look at the dots on this slide, we like to talk about dispersion a lot within farmland. That just means the variance around average. And you can see this is a very inefficient asset class. And that is something that we like to use data and our relationships to our advantage in order to make sure we're buying investment grade farms at very attractive prices for investors so that hopefully we can outperform that market level appreciation that Rob mentioned of 5.8%. And then finally, just looking at the expected annual revenue and expenses. Again, this is walked through in the financial model, but we want to also provide it here. You can see the income comes from the lease component. That is, we have a lot of visibility with that annual cash flow income. And then the expenses here comprise of the management fees, the annual property taxes, annual insurance, and simple tax preparation fees. Again, a component that we have quite a bit of visibility into. And then when you put all that together, this is a demonstration of the year one hold, what the cash on cash yield would be. And it's 3.5% for the Little Blue organic farm. So with that, we are going to open it up for questions now. Again, there's a Q&A section at the bottom here. We're going to let everybody kind of queue in, put in their questions, and I'll let Rob hop on the first since I'm sure he's had time to review them.
Yeah, absolutely. So there's a question here about what type of investment classes we have. So investing individually versus through an entity. There are several different ways that you can invest on AcreTrader. And what's really important is that you can manage all of these under one login. So if you log in, go to your account page, you can open an investment account. There are several different types of investment accounts available. You can open an individual account. You can open an entity account. You can open a self-directed IRA account. For self-directed IRAs, I will note we have 3 custodians that are compatible with our backend system. So we can facilitate investments through Alto, Equity Trust, or InTrust. You can also have a solo 401k account or a trust account. All of those accounts can be managed on one login. So you can have a single login, and then when you go through the investment process, you can choose which account you want to invest through, as well as make multiple investments through different accounts. I will mention AcreTrader investments are only available to United States citizens, United States legal residents, or US-based entities.
There's a question here about the expected hold period. Why is it 8 years? Why is it not 10 years? And then there's also a question about how to think about permanent crops and what's the difficulties in California and the lessons of the last few years there. First, on the hold period. So we like investors to think about a 5 to 10 year hold period. What we never want to do is say we're going to sell this farm in this given year, because that will not drive optimal outcomes for investors. What I mentioned earlier, it's our job to identify a motivated buyer who's willing to pay at the high end of market during the hold period. We believe that the appropriate time frame to think of these investments is 5 to 10 years. We model in 8 years. You can actually change that dynamically in the model that we provide. You can input a different year and it'll give you a different outcome. And so you can play with those triggers as you see fit. As far as what has happened with California almonds over the last few years and the difficulty in that market, in terms of like what AcreTrader has learned, it's really important to understand the difference in assets. Row crops with no improvements or very minimal improvements carry a significantly different return profile when you compare to a permanent crop investment, such as an almond orchard, that has significant value and improvements, and you're operationally exposed to changes in the commodity that's produced. Whereas with something like the Little Blue, the cash flow stream comes from the $415 of cash rent that is paid annually. There is also a bonus rent component that I failed to mention earlier, where if commodity prices hit a certain level, that triggers for an additional bonus rent above the 415. But when you have a cash lease, the visibility on those cash flows is significantly greater than when you have operational exposure and exposure to commodity prices and inputs. And then in addition, many permanent crop investments that have struggled in the recent years also carried a debt component. We do not use debt on any of our AcreTrader management managed offerings. And then finally, AcreTrader management does not do permanent crops. Everything that we've ever done has been row crops or bare ground investments without improvements. And that is because we believe that is the right risk profile. We haven't done any permanent crop investing or any third-party investments offered on the platform since the first quarter of 2024. And we proactively did that to make sure that the risk profile with our investments appropriately matches up with the risk expectation of investors on our platform.
There's a question here about Drew's mention of a 3-year transition period. So to be clear, when you take productive ground from conventional agriculture into organic certification, it is a 3-year transition period where functionally you have to farm organically, but you can sell your crop as conventional crop. So you don't get the premium that Drew mentioned until that conversion process is done and your ground is certified organic. That is a regulated process. It is not easy. It is time consuming and expensive. What's worth noting is this specific farm has already been converted. So the ground in the Little Blue Organic Farm was converted organic in 2011 for one of the parcels, 2021 for the other parcels. So these have already been organic for several years. So that's going to denote the premium from the cash rent. So the cash rent for organic commodities, particularly corn and soybeans today, is higher than conventional because this ground has already been converted. We also see that as an additional safety mechanism within the investment. There is less than 1% of ground in the United States is organic certified. So keeping that supply, that's an even smaller supply bucket to pull from. Traditionally, organic farmers are going to work really hard to hold on to the organic certified acreage they have.
There's a question about the impact of the trade wars with China trying to attack U.S. Soybeans. Couple ways I'd answer that. First of all, for conventional soybeans, yes, those are very reliant on the export market, and China is a major buyer. There are a lot of media news headlines on this, and it's a major topic. I will say, though, if you look at the actual price of soybeans going back over the last year, they have been relatively flat around $10 a bushel. So we haven't seen the impact on soybean prices yet. It is a concern if we continue to alienate our trading partners on the long-term export viability of soybeans, and new markets will have to be developed. And that is a longer-term question. Now, as it relates to the Little Blue Farm, this is very important. These are organic soybeans, and we had a couple of slides on this, and I hope it came through appropriately. We are a net importer of organic soybeans and of organic corn. That means we do not export any organic soybeans or corn in this country. In fact, we have to buy them from elsewhere in order to meet the domestic demand. So this investment and any investment in organic corn and soybeans today is going to be serving that organic protein and organic dairy market. And that is why they get significant pricing power, because there's very limited supply. And so in many ways, this is insulated. And now you could say, well, what if everybody just turns into organic? Well, as Rob mentioned, a very small percent, something like 1% of the cropland in this country is certified organic. It takes 3 years. If everybody today decided they wanted to convert, it would be 3 years before they actually had any supply to be able to sell into this market. And frankly, we have not seen the conversion of conventional ground to organic change at any material pace over the last 10 years, if you look at the USDA data.
There's a question regarding importing organic soybeans and what country are importing organic corn and soybeans. Traditionally, that's going to be South America and then some West African nations as well. Argentina, I believe, is the top importer to the United States of organic corn and beans. But again, as Drew's highlighted, what's really important here is that we are a net importer. So it's fairly rare, certainly within conventional, that is not the case, that we need more than we are currently supplying domestically. This has driven resiliency within both the corn and soybean marketplaces. The follow-up question there was the average price of corn acreage in this area. And I'll back up right here because this is a very important slide. If we go back to the comparable sales review, you'll
To the
see,
financials.
financials.
Yeah.
Right here. So this graph on the right side, this is each one of these dots is a comparable sale. So these are farms that have sold in this specific area. We've looked at them two different ways, on a price per soil score basis and on a just gross price per tillable acre basis. And the two dots are the little blue organic farm in comparison to other sales of like ground across the last 18 months. Ultimately, the majority of returns historically from the asset class have been from the appreciation of ground. And so it's very, very important that we're focused on this. I would say within our diligence and underwriting, this is the most important variable, making sure that the product that we're bringing to the platform compares favorably to other assets of the same kind within the same region.
Question, how does this farm compare in size to other farms in the area? Is it larger or smaller than average farms? I would say generally speaking, what you see is quarter sections, so 160 acres that are broken like that. That's the general farm size that everybody thinks of here. And usually 80 to a quarter section is kind of the right way to think about the typical transaction size on a smaller level. But we certainly do see larger tracts trade just on a smaller, less relevant basis, I would say. So this farm in particular, you have one piece that's roughly 312 acres, 318 acres, and then another tract that's a little over about 169 acres. That's relatively standard size. I don't know if Rob, you'd add any comment to that.
No, I think that's appropriate, particularly in this specific region. The only thing that I would add to that is, we have other farms that we manage and that we have brought investors in, and organic farms within this same area of central Nebraska. Ultimately, every single individual opportunity on the platform is underwritten independently. And when we go to disposition, they are considered by our investment committee independently. However, any opportunity for us to gather multiple smaller assets within a region does give us the potential to then package those together at the point of disposition to then drive an elevated exit value to investors. So while there's no guarantee there, having more organic acreage in one area allows us at the point of sale to then package together multiple farms and potentially attract some deeper pocketed institutional or other buyer types that may be interested in spending $10 million, but might not get out of bed for $1 to $3 million. Ultimately, one of our sweet spots is that $1 to $6 million space because it's a portion of the market that has a smaller buyer pool. Some of the larger deep pocketed institutions aren't going to get out of bed for a $2 to $4 million farm. And then again, that range may be a little bit high for the independent farmer buyer. So that's a part of the market we've seen higher inefficiency, which is one of the reasons you see many offerings on our platform within that range.
There's a question here about water rights and usage. What has the aquifer water level been historically? Is it going up or down? So the NRD, this is what they monitor in order to decide what actions need to be implemented to make sure that water levels do not decline at a rate that they consider not tolerable. When you look at some recent heat maps for the NRD, it does vary throughout the district because this does represent a large piece. I will say the Holstein area immediately surrounding Little Blue has actually seen their water levels rise over the last several years. And so this is an area that actually stands out even within the NRD. The depth to water on these tracks specifically is 60 to 80 feet. That has been consistent to actually increasing. And again, they're monitoring wells throughout the NRD that track this to decide, okay, how do we need to implement different actions, whether it be moratoriums, to make sure that we are not drawing down the aquifer. And so this is something that they've been implemented there for 53 years now. And they've done an enviable job. It's in stark contrast to some place like, say, Kansas, where we've never been comfortable buying farms because it's an unregulated market and they're completely depleting their aquifer. And we don't have confidence that, that's a sustainable water resource long term. And we would never invest in an area that did not have a sustainable water resource long term.
So we're about 5 minutes over on time, so we're going to wrap it up here. This presentation will be available. We have to run it through a quick compliance review. As soon as that is complete, we will not only upload it directly onto the platform, so it will be in the carousel with the pictures on the webpage for Little Blue Organic Farm. We will also email it out to everyone that's registered, whether you attended or not. Moreover, anybody that put a question into the chat that did not get answered directly, we will shoot you either an email or a call by the end of the day with a follow-up on that front as well. And again, all of our contact information is available right here. Please do not hesitate to email us. Do not hesitate to pick up the phone and call us. And thank you for taking some time out of your day to discuss this farm. It's been a pleasure to speak with you. Again, this opportunity opens on the platform tomorrow at 1 p.m. Central Time.